Good afternoon, everyone. On behalf of Axis Capital, I welcome you all for fourth quarter and fiscal year 18 earnings conference call for IEX to discuss the results and share the performance outlook. Today we have with us the entire senior management of IEX, which would be represented by Mr. S.N. Goel, Managing Director and CEO, Mr. Vineet Harlalka, CFO, Mr. Akhilesh Agasti, Director Market Operations, and Mr. Rajesh Kumar Medarita, Director of Business Development. I would first like to congratulate the management of IEX for good performance in the fourth quarter, and like to hand over the line to Mr. Goelji for his opening remarks, post which we will open the floor for Q&A. Over to you, Goelji.
Thank you, Bhavan. Friends, a very good afternoon to all of you. Before I talk about the financial performance of the company, I would like to discuss in brief about recent developments which took place in the power sector, because these developments have a direct impact on our business. This year, generation of power in the country increased by 5.32%. Total generation in the country was about 1,305 billion units. Out of this, growth of conventional generation was about 4%, whereas growth in renewable generation was more than 23%. Renewable generation has picked up in a big way this year. And coal generation constituted almost about 73% of the total generation. So coal still continues to be the main source of power generation in the country. With the commissioning of the inter-regional transmission line for import of power to NR and SR, there was very less transmission congestion in the market during this year. Transmission congestion was for less than 10% of the time, and volume curtailed on exchange platform was only about 0.43% of the total volume traded. We had one nation, one grid, and one price on 264 days during the year. Government of India has also taken many initiatives, such as rural electrification, ensuring 24/7 power supply to all households under the Saubhagya scheme. States like Telangana, UP, Bihar have witnessed double-digit electricity supply during the year. The growth in these states has been much higher than 10%. These initiatives will further drive demand in the country in the coming years. In 2018-19, we have elections in 4 states, and also this is a pre-election year for the general election early next year. So we are expecting a demand growth of more than 6% during this year. During the year 2017-18, on exchange platform, there was a significant buy by the distribution company, and there was increase in the buy bid by almost about 20%. Whereas there was a reduction in the sell bid. The sell bid with respect to earlier year 2016-17, there was a reduction by 5%. And this was mainly because we had coal supply shortage from the month of August, and that is why many of the merchant generators whose capacities were available for sale in the market, but unfortunately they did not have coal. And that is why the sell bids were lower, and prices on the exchange platform from the month of August started increasing. And our average clearing price for the whole year was almost about 35% higher than last year, and it was 3 rupees 26 paisa, whereas last year it was about 2 rupees 41 paisa. Coal production in the month of March has increased by 9%, and if the same trend is continued in this year, I'm sure the coal supply issues will be resolved. And further, imported coal prices, which were very high during last year, there has been a downward trend from the month of February. And if it continues, maybe May and June should be good month from the sales side. Coming back to the financial numbers, total trade on IEX was 56.8 BU with a growth of 26%. And this was consisting of electricity trade, 46 billion units with a growth of 14%. REC volume was 93.28 lakhs with a growth of 102%. We also did ESOP trading this year and sold about 12.99 lakhs of ESOPs. Operating revenue during the year was 230.45 crore with an increase of 16%. Other income, which mainly constitutes of interest income, was 25.62 crore. There was a reduction of 25% in the other income because of the capital investment in acquisition of technology, payout of large dividend during last year, and lower interest rate prevailing during the year. Total revenue was 256.07 crore with a growth of 10%. Total operating expenses decreased by 17%. There was a significant reduction in the operating expenses from 55.19 crores to 45.58 crores with respect to last year. And reduction in operating expenses was possible because of acquisition of technology by the company and also reduction in other operating expenses. Profit before tax was 199.99 crores with an increase of 15%. And after deducting the income tax expenses of 68.31 crore, profit after tax was 131.68 crore with an increase of 16% with respect to last year. With this profit, our EPS works out to 44.05 per share. And while talking about this income tax which we paid 68.31 crore, I would like to mention one thing, that as per the budget of this year, for the companies whose operating revenue was less than 250 crore in the year 2016-17, income tax for 18-19 is going to be 25%, and including cess and other cesses, it is going to be about 29% against 35% which was in this year. So we will be saving almost about 12 crore rupees to 13 crore rupees in income tax. So that will have a net positive impact in that part of this year. Our profit from the core business, if we exclude the treasury business, so profit increased from the core electricity trading business was more than 25%. So with this now, we are open to questions.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may please press star, then 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star, then 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star, then 1 on your telephone keypad. The first question is from the line of Mohit Kumar from IDFC Securities. Please go ahead.
Yeah. Good afternoon, sir. Congratulations on a good set of results. So my first question is regarding this open access volume and ACV volume ratio, how it panned out during FY18 and how it was in this particular quarter. And can you just comment something on the FY19, the trend which you see going forward?
The open access volume this year reduced by 38% in comparison to last year. As I told you, last year our clearing price was 2 rupees 45 paisa, and this year the clearing price was about 3 rupees 25 paisa. So because of increase in the clearing price, the open access volumes have gone down. Because in many of the states, the break-even price for the open access consumers, because of the cross-subsidy surcharge, additional surcharge, and other translation and billing charges, is less than 3 rupees. So that is why there has been reduction in the open access volume. But you know why that happened? Because there was a substantial increase in the buy by the distribution companies. We saw this year most of the distribution companies like Maharashtra, Gujarat, Bihar, West Bengal, UP, Telangana, even Tamil Nadu, Karnataka, all of them are active in the exchange platform. So demand from the distribution companies have increased significantly.
Is it possible to quantify the volume numbers for FY18, open access and ACV volume?
Volume number for the distribution company and the
open access, yeah.
Yeah, I'll give you the number. But in case of In case of distribution company, the growth was almost about more than 90%. I'll give you the numbers also.
Sure. And we should expect this trend to continue for FY19. The same ratio, ACB and open access will trade in the same ratio for FY19. Is it right way to look to think about it?
See, in case of distribution company, open access consumers, last year our volume was 24 BU, and this year it was about 14.8 BU. So there was a reduction of 38%. But in case of distribution companies, our last year volume was 15.78 BU, and this year it was more than 30 BU, 30.14 BU. There was an increase of almost about 91% in the power purchased by the distribution companies.
And should we expect the similar ratio going forward for FY19, FY20?
This year, again, it depends on the demand by the distribution company and also availability of coal with the merchant generators. If coal is available at a reasonable rate, then, and if the clearing price is, even if it is around 275, 3 rupees, then also we can expect an increase in the open access volume. But if prices remain high, then since the break-even rates are quite low, there may not be increase in the open access volume. Today we have more than 4,000 industrial consumers who are registered with us, and there was a time when we had 1,700 consumers who were active. And these days it is only about 700-800. So numbers have gone down now because of the high clearing prices. But then what is important is there increase in the demand in the market. And what we are finding, yes, in the buy bid quantum there is an increase. So there are no issues on the buy side, whether the industries are buying it or the discoms are buying it, but there is a sort of demand from the buy side, from the buyers.
My second question pertains to REC trading. Has the solar REC trading started, and can we expect a similar kind of number which you posted for FY18? FY18 was 9.4 BU. So do you expect the numbers to be same for FY19 going forward?
See, solar trading has started. Day before yesterday, on Wednesday, we did the solar trading session for the month of April, and we did both for the solar and the wind. Solar and non-solar. And in fact, REC traded for the solar number was much higher than what we did for the non-solar. Number-wise, whatever we did last year, we are quite sure that it should be possible. We should be able to achieve the same kind of number this year also. Growth-wise, last year we did 100% growth. Similar growth may not be possible because REC inventory itself is not there now. In fact, non-solar REC, the opening inventory is just about 15-16 lakh, which used to be 1.5 crore earlier.
Okay. So thank you, sir. That's it from my side. Thank you.
Thank you.
Thank you. The next question is from the line of Rahul Murkia from Jefferies. Please go ahead.
Hi, sir. So just follow up on the previous question. So the share of distribution remains at 67% of the total volumes.
Yeah, share of the distribution company was almost about 67%.
Okay. And sir, another thing I just wanted to check, if in the numbers which you have reported for the full year, the other expenses, which is at 16 crores, and the same number which you have, this number in DRH.
Can you repeat, please?
So the number which you have reported in the quarterly results for the other expenses is 16.28 crores. And in the DRHP, this number used to be, like when you, this number was approximately 221.6 crores. So I just wanted to understand, is there any reclassification that has happened?
Because of the Indians?
The number of expenses will not change.
Yeah, I mean, like the revenues has also changed. So is there some classification specifically has happened?
The classification on the expenses, because the earlier number in the reported was as per ICAP, these are Ind AS, but what you're talking about the total expenditure side in the
other expenditures.
Other expenses.
No, numbers were almost same what it was in the last year. Because the Ind AS numbers on expense side will not be that significant. Some minor changes will be there because of the IGAP and Ind AS.
Can you repeat the numbers and we will come back to you offline?
Yes.
Sure, sir. I'll get back to you offline. That's it for my side.
16 crore and 21 crore.
61 crore and 21 crore?
16 crore and 21.
16 crores and 21 crores was the...
Earlier it was 21 crore, now you are saying it is 16 crore.
Yes, sir. And, sir, another thing is, like, can you just tell me, like, the top 10 buyers, how much they accounted for the volumes?
Top 10 buyers, in case of discounts, it's almost about 86% this year. There is quite high concentration because there are few discounts where the demand increase was quite significant. Gujarat was one of the largest buyer, and it's almost about 86% by the discounts.
86% among the distribution companies buy, which is about
67%.
67%. So 86% of 67%, you can take the buy from the top 10 distribution companies.
And our top 10 buyers would be distribution companies only, right?
Yeah, top 10 buyers are distribution companies.
Okay. And so this number 86% was last year would have been how much?
Last year was 77%.
77%.
77%.
And 77% of the 40%.
Okay.
That is, there's a lot of difference between the two.
Yeah.
So last year, top 10 buyer constituted only about
28%
of the total sell on the exchange platform.
Right.
Total buy on the exchange platform. And this year, top 10 buyers constitute almost about 55%, 50 to 55% of the total buy from the exchange.
And this was majorly led by Gujarat because of the power not being supplied.
So there was significant increase in case of Gujarat, West Bengal, Maharashtra, Bihar, Qtr4, in most of this, Telangana, Andhra Pradesh, so across the country.
Okay. And approximately all the states all the states have been trading at our exchange.
Yes.
As of now,
Yes.
there are few states that missing.
All distribution companies are registered with us, and based on their demand and supply, they participate on the exchange platform regularly.
Okay. Thanks a lot, sir. I'll get back to you.
Right. Thank you.
Thank you. The next question is from the line of Ravi Naredi from Naredi Investments. Please go ahead.
Hello, sir. Any buyback on cards, sir? Buyback of shares?
See, this option was discussed, and buyback is definitely more tax efficient. But point is, today almost about 62% of the shareholders are under lock-in.
Right.
So we may consider this after October 23rd.
October quarter result. After October.
Yeah, because there is a time when the lock-in will be over on 22nd of October. 1 year period will be over.
Okay. Then you will consider it. Because here you have to pay 20% dividend tax, so that time if you buy it will be saved.
Yes.
Thank you very much.
We are basically trying to maximize value to our shareholders.
Right. Thank you very much, sir.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in this conference call, please limit your questions to 2 per participant. If you have any further questions, you may come back for a follow-up. The next question is from the line of Abhijit Sinha from Pi Square Investments. Please go ahead.
Good afternoon, sir. I'm sorry, but I missed out your future expectations for FY19, sir. So if you could please repeat that.
FY19?
Yes, sir.
Guidance
for FY19?
Yes, sir. Like I missed it from the...
We have not given any guidance on FY19.
I think you were talking about 25% growth somewhere, sir?
No, not at all. What we are saying is there is going to be a high demand during this year, and demand may increase beyond 6% because of elections in 4 states and also pre-election year. And Government of India also has taken 24/7 power supply initiatives. And there has been significant increase in the demand because of that. So that should lead to good growth on the exchange. But then, it is also dependent on that. It is also dependent on the supply. So if the coal supply position improves, yes, definitely good growth is possible. But number, it's very difficult to say.
Exactly. Perfect. And the pricing, sir, is, I think it was about 4 rupees, right? The average pricing?
Our pricing is transaction fees is, you are talking about transaction fee or clearing price?
Clearing price, sir.
Clearing price last year was, average price was 3 rupees 26 paisa.
Yes. And what is, where do we plan, where do we think that might go? Do we think that might go lower?
Again, very difficult to say. It's a question of demand and supply.
True.
If the supply improves, I'm sure it should come down to less than 3 rupees. Okay. But then difficult to say. If the supply don't improve, it can remain at more than 4 rupees. It can go even to 4.5 also.
Perfect, sir. Thank you so much. Yeah.
And there was one question about difference in the expenditure.
That was basically the incentive on the RECs. So in the IGAP, the incentive was shown as a separate line item in the expense side. And because now the company moved from IGAP to the Ind AS, the incentive being directly related to the revenue, so it is netted in the revenues. That is the differential because of the reclassification and regrouping.
All right, sir.
Okay.
Thank you. The next question is from the line of Alek Dalal from 130 Capital. Please go ahead.
Yeah, thank you. In terms of the admission fees and annual fees, while it seemed like for the financial year you said clients were up by 8%, but the fees were down by about 6%. Could you tell me what the client addition number was for the fourth quarter and why we are seeing 14% on average sort of price declines on admission fees?
What is happening in case of the open access consumers, though there has been addition of open access consumers to our registered list, but then depending on the break-even price in the different states and our clearing price, many of the open access consumers, when they find that the prices are increasing, the trend is upside and coal supply position may not improve, so they don't participate on the exchange platform. And when they don't participate, they say, there is no point in paying the annual fees, please deactivate us. And whenever we find that the price situation has improved now and the prices are going to be lower, we'll start participating and then pay the annual fees to you. So we have given this flexibility to the participants.
Okay, the number of clients added in the fourth quarter, what was that growth?
Yeah, we added
about 225, no, not quarter, but in the year we added about 225 participants in our electricity portfolio, and total about 460 clients we added overall in including electricity, REC, and research. Only thing is there were a lot of deactivations. So deactivations were about 900. So net we lost in terms of total new clients, net addition if you take. There was a loss of about...
Active client number reduced because of that.
So the annual income coming from annual fees of such clients we have got less amount of fees from such clients.
I see. Got it. And The employee expense has jumped a fair amount this quarter. Can you just explain that a little bit?
Employee expenses?
Yeah.
The employee expenses increased because this year, in the month of May, we did the technology acquisition. And when we did the technology acquisition, we also took those 23, 24 persons who were there in the technology team with the 63 moons. Those persons who were dealing with this technology, we have taken them on our roles so that we are able to use the technology, make the changes in the source code software, and meet all regulatory requirements and business requirements. So that is mainly because of that, and we have also taken one CTO on the role now.
Okay, got it. Just last question on this whole PNRGB initiative in terms of the natural gas exchange. Could you give some color on how that's progressing, what the timing you expect to be, how do you foresee whether GAIL will become an open source platform, and what are the next steps there, and how quickly you can actually, be generating revenues from that?
See, if you look at gas exchange and power exchange, there are not many synergies between the two. I mean, power is transmitted through the transmission lines, gas is transmitted through the pipelines. As far as the quality is concerned, it is a uniform quality when they are in the pipeline system. So you need basically gas meters, gas quantity and quality meters at the end of the different consumers and suppliers. And all these energy accounting is done by a third party. So business models are quite similar. So we find that we are in a good position to take up the gas exchange initiative. So we are in discussion with the different stakeholders. We have been meeting them, and we are also trying to develop our own capability, talking to a couple of technology providers also, what kind of products are good for the Indian market. So we are working on all that so that we are keeping ourselves ready whenever there is an opportunity, whenever the enablers which have to be created by the Government of India, by the PNGRB, whenever they are in position and regulations are issued, we are in a position to start the exchange. So we are keeping ourselves ready for that.
And this alliance with the Japanese...
Mr. Dalal, may we request you to come back in the queue for
Sure. Sorry. Sure.
I mean, I got this point. Our MOU with the JPX is basically for the knowledge sharing. So it has no financial implication. It's just for the knowledge sharing.
Okay. Thank you.
Thank you. The next question is from the line of Rahul Ranade from Goldman Sachs Asset Management. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. Just the dividend for the year, which is 22 rupees lower than last year's dividend, is it also, part of the strategy of, kind of looking at a buyback after the 1 year lock-in concludes, and that's why lower dividend this time?
The number two, 22 rupees dividend means there is a fund outflow of almost about 80 crore rupees from the company, which is, I think, more than 60% of the total PAT of this year. So we have given significant dividend. Second is, we are trying to maximize value for the shareholders. So we are looking at different options. Maybe at the appropriate time, we can consider the buyback. Gas exchange is another initiative we have discussed. We are also looking at it. It will also require some capital expenditure. And we are looking at other opportunities also. The intention is basically to maximize that value for the shareholders.
Okay. So the payout actually last year was higher, right? It was close to 80%, right?
Last year was quite significantly higher. We had accumulated cash and we were going for the IPO, so we gave good dividend. But then 22 is also very good dividend number.
Yeah, sure. No, I was just looking at it from a YOY perspective. Okay, yeah. Sure. Yeah, thank you.
Thank you. The next question is from the line of Deepak Agarwal from Elara Capital. Please go ahead.
Hello. Yeah, good afternoon, sir. My first question is, sir, now that, as you mentioned in the opening remarks, there are 4 states due for elections this year, and of course there will be a precursor to the general elections next year. So, like how do you see, what can be the volume variation that can happen, like in your past experience, that we can expect for FY19?
See, I told you this year the total demand in the country may increase by more than 6%. This year the increase was only 5.3%. It may increase more than 6%. This itself is a significant increase in the demand. And a good part of this incremental demand is met by the short-term market. So exchange should be a bigger beneficiary of this incremental demand. Number difficult to say for anybody, by anybody, but if the supply position improves, demand is already there, it should lead to a good growth.
In fact, a fair bit of incremental demand last year in 5.3 was met from renewables, which are not coming in the exchange market. So that will also mean that even...
See, I mentioned also that out of this 5.32, the increase in generation from the conventional generation was only 4%, and by renewable was 23%. So renewable has supported demand to a large extent, and demand increase by the coal was virtually about 4%.
That trend can continue in FY19 as well. Then how come will the demand in the short-term market will increase because of this disproportionate growth in the renewable?
See, when the renewable generation is increasing, we have seen that wherever renewable generation is increasing, demand from those states is also increasing on the exchange platform. Because in those states, the renewable generation there is a lot of variability in that. So when renewable is not available, during that time, these states come to the exchange platform.
Okay.
And there are states who in fact also sell when the high renewable is available with them. So renewable in a way is helping the exchange.
Okay.
We are basically saying that there is a difference between supply coming from a coal-based plant which is flat and which is more predictable than renewable. So whatever energy, in energy terms, you will see there has been support from renewable energy side. But as far as certainty is concerned, so because certainty is not there, so people rely more on short-term market than on the long-term market. So they don't do tie-ups for or PPAs for the renewable capacity they have. But many times they have to come to the market because suddenly wind is not available or solar is not available. Solar is available only maybe part of the day, but balance of the time you have to rely on the market. So things are then left to the short-term market more as compared if you add similar capacity in coal, then you definitely lose that demand from the short-term market.
Okay, and my second and last question is on this trend of DISCOMs having a much larger share, resorting to the exchange market versus an open access customers in FY18. So this trend is likely to continue in FY19 because if the exchange price, the clearing price were to remain fairly in the vicinity of around 3.75 to 4 rupees, then it will be fair enough to say that more of DISCOM participation will continue versus the open access, which was not the case in, let's say, FY17 or 16.
Yeah, purchase by distribution companies is definitely going to be more. Not only
significantly more, but significantly more.
Significantly more. It is also because that in most of the states, demand increase is happening, and a good part of the incremental demand they are meeting by purchasing power through the market.
Okay. Okay, thank you. That's it from my side.
Thank you.
Thank you. The next question is from the line of Dhruv Muchal from Motilal Oswal. Please go ahead.
So a quick one on the balance sheet. In the current assets, in other current assets, there is a significant increase YOY, and similarly in the liabilities also there is an increase in other financial liabilities in the current liabilities section. So what does that relate to?
Can you just repeat the question?
So in the current assets portion, in the other financial assets, and similarly in the current liabilities, other financial liabilities, there is a significant increase YOY. I think there is some Indies-related thing, so just wanted to understand. So the amount is, so the last year, the amount was about 81, so about 81 crores. This year it is about 160 crores in other financial liabilities.
Other financial liabilities is basically the trade payable, and basically there is a significant increase in the amount of the deposit what we have from our members, because the prices of electricity has gone up, so the margin amount has gone up quite significantly. This is one of the portion which is subsequently increased, because the paying payout option has also increased, and secondly the deposits amount has also increased.
Okay, so this relates to the margin amount which we get from our participants.
Yeah.
And similarly, and similarly will be the impact on the, so what explains the other receivables, so other financial assets, other receivables, other recoverables, there is also an increase there?
We had the redemption of some investments. We have a significant investment of 60-70 crores, which we took on the 27th of March, and because of the bank holidays, we received that amount on the 2nd April, so that was appearing as a receivable. To take the sure. Of the tax benefit.
Got it, sir. Thank you so much. Thank you. That's all.
Thank you. The next question is from the line of Drashti Shah from Investec Capital. Please go ahead.
Hello.
Hello.
Yeah, hi sir. So I wanted to know that why is the volume growth weak in Q4? So is this a cyclical thing that like every Q4 our volumes are going to be low? Because compared to it, the whole year volume has grown at a good pace of 26%. So.
In Q4, again, as I told you, because of the coal shortage, the sell side volumes were not there. If you look at the actual number, you will still find that the sell volume was more than the buy volume. But what was happening in case of, because, January, February months were the winter months. So there was a lot of sale during the night hours when the buy was not there. But during 16, 17 hours of the day, right from morning 6 o'clock to night 11 o'clock, there was high demand, but sale was less. That is why the growth number was lower.
Okay, so this is more of a cyclical thing. Like every Q4, we can expect the volumes to be a little weaker than the remaining 3 quarters.
No. If the coal supply position is better, and if there is enough supply to meet the demand, then yes, the volume growth will happen.
Okay, and sir, can I get the breakup of DAM and TAM?
Yeah, the TAM number is 45 billion units.
44.84.
44.84.
TAM is 1.6.
44.84
billion units. And TAM number is 1.372 billion units.
Okay, sir. So, and one more question. So, because of our MCP increasing to 4 rupees, can we see a pressure on the short-term volumes because the gap is narrowing between the long-term and the short-term price? So, could that be a reason for pressure on the short-term volumes, and can we see volumes move to long-term again?
Number one, the clearing price was not 4 rupees, it was 3 rupees 25 paisa. The clearing price was 4 rupees only in the month of March and was in the month of, I think, September and October. So if you take the average price for the whole year, it was only 3 rupees 25 paisa.
Okay.
In the last 5-6 months, many states have gone to the big platform for purchasing power under the bilateral contracts. And the price discovered under those bilateral contracts is more than 5 rupees in most of the cases. And unfortunately, most of the states have not awarded those bilateral contracts. Why there is a high price? Because generators are not sure whether they will be able to get coal or not.
Okay.
So that is the issue. I don't think this kind of a short-term phenomena will lead to shift in the market design or market going from the exchange to the short term or the long term.
Okay. Okay. And so, do we see the EBITDA margins at 80% range? Like, is this the normalized range, or we expect this to come down over the quarters?
In fact, it is likely to go up. I feel it should stabilize around 80 to 83% kind of number.
Okay. Okay. Okay, sir. Thank you so much.
Thank you. The next question is from the line of Manish Khurana from Shahaj Concepts. Please go ahead.
Yeah, hi. I had two questions. I think both of them are answered. So thank you so much.
Thank you.
Thank you. The next question is from the line of Akshay Ajmera from Mire Asset. Please go ahead.
Good afternoon, sir.
Good afternoon.
So all my questions have been answered. I just wanted clarification on one thing. You had mentioned some benefits on taxation. So could you repeat that again, please?
So in case of, if you look at the budget announcement, the companies where the operating revenue was, total revenue was less than 250 crore rupees in 2016-17, for those companies, tax rate will be 25% for the year 18-19.
Okay.
And this year, our 17-18, our tax rate was 30%, 30% plus other taxes, it makes about 35%. So now it will be about 29%. So there will be 6% saving in the tax.
Okay, sir.
Yeah.
Okay, sir. Thank you. Got it. Thank you.
Thank you. The next question is from the line of Mohit Kumar from IDFC Securities. Please go ahead.
Hello. Yeah, good afternoon, sir. Sir, one question regarding the tax rate. Because given the fact that this is, if this continues for FY20, given the fact that our FY18 revenue is also below 2.5 billion, so it should benefit ideally our FY20 numbers. Is my understanding correct?
See, announcement is for the year 2018-19.
Right.
So we don't know what will be the provision for the year 2019-20. But going to the past trend, see, if you look at last year budget, it was 50 crore rupees total revenue for the year 15-16. Now, the year has been changed from 15-16 to 16-17, and amount has been increased from 50 crore rupees to 250 crore rupees. So maybe next year it could be 500 crore rupees or 400 crore rupees. We don't know, but let's see.
But this number will be the number on which this will be measured for FY20. It will be FY18 revenue or FY17 revenue.
Again, it depends on the government announcements. But going by the past trend, it will be 17-18.
17-18, which is 2.3 billion for this quarter. So my one question, the second question pertains to ESCert volumes. I believe this ESCert volumes will not be available for trading in FY19. Am I correct?
Yeah, ESCerts are done basically once in 3 years. So we did volume this year, so next it is expected in 2020.
Okay, sir. Thank you, sir. Thank you.
Thank you. The next question is from the line of Rahul Murkia from Jefferies. Please go ahead.
Hi, sir. Thanks again for the opportunity. So just wanted to know anything on our margin side from the regulator, any incremental there?
No, I mean, regulator asked us in 2017 September. We responded again in December. They wanted some more clarifications. We have responded to that. So we haven't had anything after that from the regulators.
Okay. So what sense? I mean, just wanted to understand. Do you think that would this be a priority for the regulator to regulate the margins that we are making, or the priority is to increase the short-term prices, short-term volumes?
8 months have passed, so I think this is not in the priority list. And what is important for the sector is development of the market. And I'm sure regulator will also take a view on this.
Thanks a lot, sir. That's it from my side.
Thank you. The next question is from the line of Drashti Shah from Investec Capital. Please go ahead.
A follow-up question. So I wanted to ask that, do we expect the regulator to revise the commissions anytime soon?
Just now we discussed about this issue, that we have responded to all the queries raised by the regulator, but we haven't heard anything from the regulators.
Okay. And are we expecting to hear anything soon?
Necessary that regulator is going to revise this.
Okay.
The regulator in the past has taken a position that exchanges are free to decide their margin. And not once in 2008 also they said, 2015 also they said the similar thing. And our margins are same from last 6 years.
Okay. Do we, so in the volumes you explained for DAM and TAM that the coal unavailability had resulted in the volumes to be down. But what about REC? So even the REC volumes are down by 6%. So what would be the reason for that?
This quarter are down, but if you look at if you look at the whole year, then REC volume is up by 100%. So whether the distribution company bought the REC in the month of January, February, March, or in the month of November, December, doesn't make a difference. It is a RPO compliance on a yearly basis. It is not daily power demand.
Yeah, so once in a year they have to buy REC, and this will be renewed every year, right?
Yeah. I mean, RPO compliance is on yearly basis.
Okay. Yeah. Okay. So, and any update on the gas exchange?
I think we discussed, 2-3 questions before, that government is considering to set up a gas exchange. And in fact, regulator also have issued some expression of interest to appoint a consultant who can advise them for formally drafting the regulations and suggesting about the gas exchange model. So we are also working because there is a lot of synergy between the gas exchange and the power exchange. So we are talking to different stakeholders and trying to understand the potential of the market, talking to a couple of international gas exchange operators to understand what kind of products will be good in the required for this market, and also who are the technology providers for this, so that we are ready to launch the exchange as and when the opportunity arises.
Okay. Thank you.
Thank you. The next question is from the line of Akshay Ajmera from Mirae Asset. Please go ahead.
Yeah, thanks for the opportunity again, sir. So in your recent announcement, there was some tie-up with Japan Power and Electricity Exchange. So could you highlight more on that?
Yeah, this was a MOU signed with them, JPX, Japan Power Exchange, and this is basically for the knowledge sharing. As you know, Japan has got a very robust market. It's a developed economy. So there are maybe good practices which they have, and maybe there are few good practices which we have in the country. So it is basically for the purpose of knowledge sharing and understanding practices.
Oh, okay. So are we exploring any other opportunity apart from India, where we can have some tie-up and do business overseas?
We are exploring these options. For electricity market, you need some minimum size of the market. So maybe about 15,000, 20,000 megawatt of installed capacity. So we are scanning different markets. If there is opportunity, yes, we will definitely try to explore that also.
Okay, sir. Fine. Thank you.
Thank you. The next question is from the line of Noel Vaz from IIFL Securities. Please go ahead.
Yes, sir. Actually, sir, I just wanted to clarify one thing with you. You have mentioned that in Q4, that the that the trading volumes were slightly lower because of low coal availability. Now, as you have seen in Q1 itself, the coal availability issue has not really been resolved. So, would we see Q1 trading volumes being affected?
See, one good thing what we saw in the month of March, that coal production increased by 9%.
Yes, sir.
We are yet to have the number of April, but if the trend is continuing, which we see that, yes, many of the coal plants are working now with a comfortable coal supply situation. So if that trend continues, and also the imported coal prices, which had reached a very high level of more than $100, and we understand that there is a reduction by 22% in the last 45 days.
Okay.
And if this trend continues for next 1 year, next 1 month, I'm sure there will be many generators who will be willing to import the coal and supply the power. So that should lead to comfortable supply situation and increase in the volume on exchange platform.
Okay.
And
so
after May, we start getting wind, so that also relieves the pressure on supply of coal.
After May, wind starts. After June, monsoon starts. So let's see.
Okay. That is all from my end. Thank you.
Thank you. We take the next question from the line of Bhavin Vishlani from Axis Capital Limited. Please go ahead.
You have just one question. What is the sustainable payout ratio that we should be working with? A dividend payout ratio, which could include dividends or buyback.
See, in the DRSP, we had said that company will endeavor to pay 50% of the PAT in the form of dividends. And we will continue to do that. Our effort will be to maximize value to the shareholders. We will keep on exploring different options by which we can maximize this. If there are good investment opportunities, gas exchange, any other investment opportunity, we will try to explore that if that can give more return to the investors. Buyback is one alternative, one option. After October, we can consider that. So payout ratio, it all depends on the opportunities available.
But
we definitely feel will in the form of the buyout or the dividend payout, we'll try to maintain that 50% figure at least.
Okay, but assuming next year the gas exchange does not materialize, then would it be fair to assume a 100% payout for fiscal 19?
Let us be ready for launching the gas exchange. That will give more value to my shareholders. If I'm holding money for that, I'm sure my shareholder will appreciate that.
I understand that, yeah. Okay, that was the question that I have. And on behalf of Axis Capital, I'd like to thank the senior management of IEX for giving us an opportunity to host the call. Before we end the call, I'd like to hand over the call to Goelji for concluding remarks.
Thank you, Bhavan. It was a good interaction and good year for IEX. They are looking for a good, vibrant market this year. I'm sure with the prevailing conditions, the growth will be much better than what we have achieved last year. Thank you.
Yeah. Thanks, Bhavan.
Thank you, Rajeshji.
Thank you, Bhavan.
Thank you, Vineet.
Thanks.
Thank you very much, sir. Ladies and gentlemen,